Many of you are looking for ways you can grow your small Forex account, and you are doing several things which might not be the right way to do that. I've seen several persons trying to flip small accounts, $10, $100 account or more or less, to a large amount of funds because they have limited funds in their account, and they are being motivated by a lot of fake forex gurus on YouTube and Instagram showing how they flip accounts. But I want you to be focused and not to be carried away by many things you see on YouTube and on Instagram. All right, there are better ways and more consistent and better ways you can actually grow a small forex account. So I want to give you the realistic and the better way you can actually grow your forex account without passing through the risk of over leveraging and blowing your account. All right, so how do you grow your small forex account without stress? So I want to share with you about 9 ways you can grow your forex account without stress. Growing a small forex account is possible. It is very, very possible. All right, so growing a forex account is possible if you actually know what to do. Any account that is less than $1,000 is considered a very small account. Any account that is less than $1,000 is considered a small account. Not to worry, most of us that are experienced traders, we actually started small, and that is why I'm giving you some tips about what you're going to do, what you can do to actually grow your small forex account. You don't need to gamble your way to having a big account. There are steps you can actually take to grow and to build your small account until it's become big, that can actually pay your bills and do other things. You can do other things with the account. All right, number 1, you need to open an account with a reliable low spread forex broker. This is very important. You want to be sure that your broker is regulated and reliable. Okay, if you want to build an account, you need to be sure that your money is safe, your funds are safe with your broker. So in doing that, you need to be sure that you are trading with a reliable and a regulated broker. Another thing you need to do is to ensure that your broker allows trading of nano lots, 0.01, 0.02, and the rest. You need to be sure that your broker allows trading of nano lots, so that with your small account, you don't need to over leverage. Okay, you don't need to over leverage. There are several regulated brokers out there. You can do your research. I currently recommend 2 of them, and you can see them in the description box of this video. The 2 brokers that I recommend, you can see them, the link to these brokers account, to these brokers. Actually, you can see them in the description box of this video. All right, so now you need to open an account with a reliable low spread forex broker, a broker that allows low spread, so that you can be able to grow your account. That is the first step towards growing a small forex account. Number 2, you need to only learn to take high probability trades. Learn to trade only high probability trades. I've seen traders, taking trades, every trade they see, thinking that is by the number of trades you take that you grow your account. No, you don't grow your account by the volume of trades you take. No, but by the quality of trades that you take. You need to avoid over leveraging. You need to take only trades that fit into your trading plan. So I recommend a maximum of 2 high probability trades per day in order to grow your account. Maximum of 2 high probability trades per day. Okay, the more losses you take, the less losses you take, the better your chance of growing your account. And in order to take lower losses to higher wins, you need to ensure that you are taking high quality trades. You need to focus on quality over quantity. Number 3, you need to trade only high volume sessions. Okay, there are several sessions in the market: the Asian session, okay, the London session, the New York session. Okay, you need to ensure that you take the high volume sessions. You have a higher chance of growing your account if you are taking trades during the high volume sessions like the New York session or the London session. So this is number 3 point. You need to take trades only during the high volume sessions. Now, number 4, you need to only take trades with high risk to reward ratio. Personally, any forex broker I see that wants to actually make progress, first you need to ensure that each trade you are taking, you don't take any trade that is lower, that has a lower than 1:2 risk to reward ratio. Okay, I don't take trades lower than 1:3 risk to reward ratio. 1:3 risk to reward ratio is the lowest risk to reward ratio I take per trade. All right, so sometimes I take trades of 1:5, 1:6, even 1:10 risk to reward ratio, but I don't do less than 1:3 risk to reward ratio most times on average. So if you want to grow your account, you need to be ensure that you are gaining more than you are risking. Each trade you take, you actually gaining, you have the potential of winning more, gaining more in terms of R multiples of your profits in relation to the risk that you are putting per that trade. Okay, you need to learn to take high risk to reward ratio trades. And how can you do that? You need to find out strategies that enables you. Not all strategies can enable you to have a high win risk to reward ratio. Not all strategies, okay, but find out the right strategy that would help you to maximize your risk to reward ratios. That is how you can grow. That is one of the ways you can grow your account, your small forex account. Now, number 5, trade small time frames. Okay, I know everybody might not agree with this, but this is what has personally worked for me. I've done swing trading, I've done scalping, I've actually day trade also. I've tried most types of trading styles, and I've come to understand that if you really want to grow your small account, you need to trade the smaller time frame. How and why is this important? Okay, why is this important? It's important because it helps you to get smaller stop loss. Okay, helps you to get smaller stop loss, and also helps you when you have smaller stop loss. Your loss size can actually increase without increasing your risk. When you have a tighter stop loss, okay, below 20 pips, below 10 pips, your loss size per trade can increase without increasing your risk per trade. So that is why it is important to trade the smaller time frames. I don't actually mean scalping. Okay, it can be scalping, it can be day trading, it can be swing trading, but it is important that you find a way to trade the smaller time frames if you really want to grow your account. Now, that does not mean that your trading bias has to be focused only on the small time frames. You can get the overall market trend and direction from your higher time frame analysis, but your entries, you need to ensure that your entries are on the lower time frames, like the 5 minutes, 1 minute, okay, the seconds time frame. Those will help you actually to maximize your profits and also the small size of your account. Okay, you can be able to have a lower stop loss, tighter stop loss, smaller risk per trade when you trade the lower time frames. Okay, now trade only forex pairs with low spread. Now, if you want to grow your account, I don't expect you to be trading gold. I don't expect you to be trading the US 30 or the Nasdaq. I don't expect you to be trading pairs with low spread or instruments with with high spread. I don't expect you to be trading instruments with high spread. Trade low spread pairs. It's important for your account. It's important for your account growth. Some of the forex pairs you can actually trade the Euro USD, the USD JPY, the GBP USD, the USD Swiss franc, the Euro JPY. Those are examples of low spread pairs, Forex pairs. So you need to trade the lower time frames. You need to also trade Forex pairs with low spread. It helps you to be able to maximize your risk, to reduce your risk, and also to increase the possibility of managing your account and reducing your losses. Okay, now number 7, manage your risk. It's an important step. This is a very important step in growing your account. If you want to actually grow your account, you need to ensure that you're not losing so much in the account, because if you keep losing funds in your account due to over leveraging, your account will not actually grow. Personally, not just personally, even in the industry, 1% maximum risk is advised, and you need to ensure that you're not risking more than 1% per trade. Do not risk more than 1% per trade if you want to grow your account. And if you have a small account, do not risk more than 1% per trade. Use stop loss. Always use a stop loss. Trading without a stop loss is a sure way. It's one sure way to destroy your account, because nobody has 100% 100% certainty of what the market is going to do. No strategy has a 100% win rate. So you need to ensure that you use a stop loss so that you can be able to control your risk, control your losses. You must use a stop loss per trade. You must use a stop loss per trade. Any strategy that does not incorporate the use of stop loss per trade, please avoid such strategy. Run away from such strategy. It can be working in a short time, but it can be working over some days, some weeks, but it just takes one trade. It takes one trade, one market move to wipe out all your losses, all your profits, and even to blow your account in some cases. So you need to ensure that you are controlling your risk. Risk must be controlled, risk must be consistent, and risk must be regulated per trade. Okay, you need to be patient. You need to ensure that you are not in haste. Growing an account needs patience. You need to ensure you're not in haste. Okay, haste makes waste. Haste brings about losses. Haste brings about poor market decisions. Haste brings about losses. Okay, so 8, deposit frequently into your trading account. So no matter how small you have, just ensure that you are depositing funds into your trading account on a frequency basis, on frequent basis. Okay, this helps your account to grow. You are trading, you are making profits, you're also depositing into your account. And so in doing this, I will advise that you have a side business or a job that you can use to fund your account until your trading account grows to a point that it can sustain your needs. You need to have a job, you need to have a side business that funds your trading. You cannot trade full time with a $1,000 account. No, you can't trade full time with a $2,000 account. No, okay. In most countries, depending on the standard of living and of the country, if you want to trade full time, you might want to start. You might have an account of over $50,000 or $100,000 and above, depending on the country. Okay, from $50,000 or $100,000 and above account size of that amount, you might want to consider trading full time. Even if you have $100,000 account, it doesn't mean that you have to focus on your account alone as your entire source of income, because some months you might not have a good month. Some months might not be good in your trading. You might have some losing months, okay, or low income, low profit months. So if trading were to be the entire your exclusive source of income, then you're going to suffer in such. So that is why it's important that you have, even if you have a large account, you need to have some side business or some side hustle of businesses that would also provide additional sources of income. So as a small account holder, it's important that you deposit frequently into your account if you want your account to grow. And in doing that, you will need a side business. Now, number 9, which is very, very important also. You need to compound your profits. If you want to grow your account, you need to avoid withdrawals from the account. Don't withdraw your profits for now. Okay, avoid withdrawing from your trading account until your account grows to a sizable amount. Find other ways to pay your bills while growing your account. If you have a good trading strategy, you can make 10% profit per month without too much stress. Like my strategy now, even in my among my mentees, in some months we do 20, 30, okay, percent capital profits or return on investments, or percentage profits per account. Like last month, the month of June, we did about 34% profit in 1 month. Okay, so our benchmark is actually 10% profit in a month. So it is possible. So if you invest, let's assume that you have developed your trading skills, and you make at least 10%, an average of 10% profit in a month, and you reinvest these profits. Okay, you compound these profits on your account consistently, and you actually fund your account with $100, and you make 10% a profit in a month, and you compound these profits over years. Let us see how the effect of compounding is going to favor your account. Let's see it now. Now, if you compound your profits, your 10% profit, monthly profit on a $100 account, let's see. You see, in the first year, your interest on the account would be your interest on the account will be about two about 213. Okay, now okay, so if you actually compound your $100 account on a monthly 10% profit at the end of year one. Sorry, yeah, this is year one now. This is year one. Okay, at the end of year one, you should have about, your account would have grown to 313.84%. 313.84%. The interest on 1 year, this is yearly. The interest on 1 year should be 213.84. Okay, 213.84. The accrued interest about 213.84 dollar, and the total profit, the total account balance from $100 deposit in 1 year, you should have a total account balance of 313.84%. That is if you compound 10% monthly profit on a $100 account without adding more funds. Okay, in year two, should be your interest, and this should be your account balance, 984.94%, not percent, $94. Okay, now in year three, your account balance should be $3,091.27. Okay, now at year five, from $100 on a 10% monthly account growth, okay, you should have had a balance of $30,448.16 from a $100 account. Okay, now let's see what happens in year six. Year six, you see $95,000 plus dollars. Okay, year seven, things gets more interesting from here. Year seven, $299,000. Year eight, $941,000. And in year 9, you are now a millionaire in dollars from the ninth year. If you compound $100 on a 10% monthly account growth, if you compound it monthly without withdrawing, by year 10, your account balance would have risen to 2,953,996 $9.64, and in the 10th year you would have built the $100 account to 9,270,906.88. So did you see, can you see the wonders of compounding? From this you can see the wonders of compounding of your account. When you compound your account, okay, your forex, your trading account, without withdrawals, you will see the benefits. This is just a hypothetical analysis, but this is not actually far from the truth. I know that in some months you might not make 10% profit, but in some months you can also make above 10%. So, but on average, if you make 10% profits on average per month, if you have upped your trading skill, you can compound a small trading account, and over the years you will actually reap the benefits. Okay, so I challenge you to do that. You will reap the benefits. So thank you so much for viewing our videos. Okay, thank you for viewing this video. Kindly please subscribe to our channel, like, okay, and share our videos with others. Okay, please like our videos, subscribe to, if you have not subscribed to the channel, you can subscribe to our channel so that you'll be alerted when new videos are uploaded, and also kindly turn on the notification bell on this channel so that you can be alerted when new videos are uploaded. You will also have a Telegram channel where we post other information and also some chart analysis. You can actually join that Telegram channel by clicking on the link in the description box of this video. So I want to wish you all the best. You can actually grow your account. Just implement these 9 steps. Try it and see if you don't see a positive effect. You can grow your account. It is doable. It is doable. You don't need to over leverage. You don't need to flip. You don't need to do the flipping, the over leveraging method that you see online, and which puts your account at risk. Just take it easy. You're not in haste. Trust the process. Trust the process. Okay, when you focus on the process, the results will come. But when you focus on the results, you jeopardize the process. Okay, when you focus on the process, on your skill development, on the process of learning the skills and upping and raising your skills, that is the process. When you focus on the process, the results will be the byproduct. The results will come. But when you are obsessed with money, obsessed with the results, I tell you, you are going to jeopardize the process. Okay, you're going to jeopardize the process, and the results will not eventually come. So please implement these strategies and this advice I'll give to you, and I bet you in no too distant time you're going to see the results. I wish you all the best in your trading till we come your way next time with another useful video. Keep on making progress, keep on practicing, keep on succeeding. If you want me to be your mentor, you can actually contact me through my Telegram group.